Good day to everyone. Welcome to our presentation on the case study of SM Investments Corporation, showcased by yours truly by the fifth group of our financial markets class.
Good day, everyone. Good day, sir. We are about to present our case study about the SM Investment Corporation. SM Investment Corporation is one of the largest and most diversified conglomerate in the Philippines. It operates in retail, property, and banking and has built a strong reputation for growth and innovation. SM Investment Corporation maintains its strong financial position with stable debt levels and strong reserves. SMIC is a financially sound company, well positioned for its long term growth, and continues to play a crucial role in the country's economic development.
How does SM investment continue to grow and stay strong even when the economy faces challenges? What makes investors confident in the company long term? SMIC succeeds because it balances expansion with disciplined financial management. It keeps debt under control, maintains strong liquidity, and spreads risk across retail, property, and banking. This diversified structure allows one business to support another during tough periods, helping the company stay stable while still pursuing growth opportunities.
Okay. The main idea of our conclusion is that SM Investment Corporation remains financially strong, stable, and well diversified. Despite market challenges, the company continues to grow through its balanced use of debt and equity, strong management, and reliable performance. Overall, our paper shows that SMIC is a solid long term investment that continues to contribute to the country's economic growth.
So basically, the stock is highly recommended as it is highly consistent with its value growth over the past 5 years. It stands out as an attractive investment as it is currently undervalued compared to its intrinsic value. Moreover, both its current value and intrinsic value continue to show promising growth, reinforcing its potential as a solid investment opportunity.
It is highly recommended to invest in Investments Corporation's bond market given the strong attractiveness these bonds hold within the investment community. Currently, SMIC's bond yields fall within a moderate range of 3.5 to 5.4, making them an attractive option compared to other investment alternatives, including government bonds. The combination of high credit quality and competitive yields solidifies SMIC's reputation as a trusted and appealing choice for investors in the Philippine bond market.
Based on our analysis, the main problem we observed is that SM Investment Corporation's stock remains undervalued, which may affect investors' confidence in the short term. So, to address this, we recommend that SM Investment Corporation strengthen its communication with investors and highlights its strong financial performance to attract more interest. The company should also continue diversifying its operations and maintain consistent dividends payout to build long-term trust and stability in the market.
SM Investment Corporation or SMIC continues to stand out as a solid choice for both stock and bond investors. Over the past 5 years, its stock has seen a steady average growth of around 5%. Back in 2020, its shares were actually 11% undervalued based on their intrinsic value, which is a great deal for investors at the time. Now, fast forward to today, and that decision seems to have paid off, since SMIC stock is now priced at 746 pesos per share, while its estimated intrinsic value sits much higher at 1,124.5 according to Alpha Spread 2025, highlighting its strong long-term potential. But it's not just those stocks that's appealing. SMIC's bonds are also worth a look. They carry a PRS AAA rating from Phil Ratings, which is the highest local credit rating, and that makes them especially attractive for more conservative investors looking for stable investment grade corporate debt with yields ranging from 3.5 to 5.4%. SMIC's bonds remain competitive with government bonds and continue to draw consistent investor interest.
SM Store and SM Markets provide a diverse range of apparel accessories, houseware, and lifestyle products. In property development, SM Prime creates innovative, sustainable cities with malls, residences, office hotels, and so much more. BDO Unibank, however, their banking system, is a full-service universal bank offering various financial services, while China Banking Corporation provides similar services to assist clients in achieving personal and business goals.
How does SM manage to stay strong in different market conditions? Why do people trust the company across generations? SM builds businesses that serve basic needs. In retail, SM Store and SM Markets offer a whole wide range of apparel, accessories, houseware, general merchandise, and lifestyle products. In real estate, SM Prime develops malls, residences, offices, hotels, and convention centers, creating modern and sustainable communities. And in banking, BDO and China Bank provide full-service financial solutions to help individuals and businesses grow.
SM Investment Corporation started with Henry C. Small Shoe Store in 1958, which later grew into one of the biggest and most successful conglomerates in the Philippines. Today, SMIC operates in three major industries such as retail, property development, and banking. Through SM Store and SM Markets, it provides a wide range of products and services to consumers. SM Primes leads in building malls, residences, and sustainable city development, while BDO and China Bank offer complete banking and financial services. Overall, SMIC's diversified operations shows its strength, stability, and major contribution to the country's economic growth.
The Philippine economy continued to show steady growth supported by strong consumer spending and infrastructure projects. However, inflation and higher interest rates remain challenges that affect both businesses and investors. But despite this economic pressure, the SM Investment Corporation continues to perform strongly, so the company maintains stable growth by managing costs, diversifying its investment, and relying on internal funds instead of heavy borrowing. In the stock market, the SM investment remains stable, which reflects the investor confidence in its diversified business operation. While on the bond side, the company sustained a strong credit position, which allowed it to meet financial obligation and maintain the trust of the bondholders.
So, how did SM Investment Corporation demonstrate resilience and growth in the face of elevated inflation, high interest rates, and currency depreciation in the Philippines? It is true by maintaining its strong profitability, relying on internal and equity funding, preserving its investment grade rating, and through its diversified operations that they continue to grow in the Philippine economy.
So, for the economic analysis, as mentioned earlier, the Philippine economy grew in 2023 due to strong spending, remittances, and infrastructure projects. Disregarding the recently issued ghost projects of the DSWD, but we shall disregard that. Inflation rose above target, leading to BSP to raise rates while the peso averaged 55.16 pesos per US dollar. Despite these pressures, however, SM Investments Corporation's net income climbed up to 26% to 31.7 billion pesos, with revenues up to 13% to 93.9 billion pesos. To offset high borrowing costs, SMIC used internal funds and equity, keeping its credit rating stock value stable.
So let's move on in the market and industry analysis. It provides an economic landscape of the Philippines focusing on retail, real estate, and the banking sector. It highlights the growth and drivers of the retail market, the expansion of the real estate industry, and the strong performance of the banking sector. As SMIC is one of the leading conglomerate in the Philippines, it has a nationwide expansion, innovative sustainability initiatives, and its role in driving economic growth. In its competitive landscape, the country has also other major conglomerates such as the Ayala Corporation and the JG Summit Holding.
As explained earlier, the Philippine retail market is set to reach 60.08 billion US dollars by 2030, supported by strong real estate valued at $90.5 billion dollars, and the banking sector generating 1.3 trillion pesos in 2024. SM Investments Corporation is active in retail, property, finance that reported 319.2 billion pesos in revenues alone and 42.6 billion pesos in their net income for the early year of 2024, with competitors like Ayala Corporation and JG Summit Holdings and etc. Whoever their competitors are, SMIC aims to sustain growth through diversification and strategic expansion across its key sectors.
The Philippine retail market is projected to reach 60.8 billion US dollars by 2030, while the real estate sector remains strong at 90.5 billion US dollars and a 42.6 pesos billion net income in early 2024. Its 56.1% debt to equity ratio shows better financial health than competitors like Ayala Corporation and JG Summit Holdings, which demonstrates that the SMIC's solid financial discipline and strong position in the country's major industries.
Of course, it's fundamental analysis, right? SMIC's total assets grew significantly from $1.59 billion dollars in 2023 to $1.70 billion dollars in 2024, despite its increases in current and total liabilities, respectively, of course. Gross revenue rose significantly while expenses also increased, but only in a lower amount in contrast to its gross revenue. The company faces financial risks from subsidiary losses and market value fluctuations, including inflation and interest rate hikes, which could affect borrowing costs and consumer spending. Additionally, however, operational risks arise from natural disasters in our country, the Philippines.
How does financial problems, market changes, and natural disasters affect SMIC's overall stability and growth? These can affect the company's stability and growth by putting pressure on its cash flow, consumer spending, and operations. However, SMIC remains resilient by maintaining a strong liquidity, diversifying its businesses, and investing in disaster preparedness programs. These strategies allow the company to minimize risk, recover quickly from disruptions, and continue achieving steady long term growth despite external challenges.
So for the fiscal year ending December 31, 2024, the SMIC showed steady financial growth, with the total assets increase with huge significance from approximately $1.59 billion in 2023 to $1.70 billion in 2024, and even with a slight rise in current and total liabilities, which grew to $343.2 million and $832.6 million. The company's solvency ratio improved to 2.0 from 1.9, which indicates a strong credit worthiness. And with its gross revenue climb from $616.3 million to $654.8 million, while gross expenses also increased to $503 million. This growth reflects the company's ability to expand its business operations and generate higher sales. This increase in gross revenue is a positive indicator of SMIC's market position and operational effectiveness. So for its risk analysis, SMIC maintains its strong cash flow and debt management to ensure that it can support its subsidiaries when needed in order to prevent liquidity risk. And for its market and interest rate risk, the company closely monitors economic trends and adjusts its business strategies to remain resilient against market fluctuations. And for its operational risk, the company regularly reviews and updates its risk management strategies to ensure preparedness for any operational disruptions.